Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. Thank you for tuning into our podcast, The Secret War on Cash. I have with me my co-host, Chris Agelastos, who's here to actually talk about some of this war on cash. And specifically, and this I think is, if we talk about a war on cash and we're talking about specifically the US dollar, this topic is exactly the right topic because this is about BRICS. And BRICS, in fact, is and has been uh, at war with the US. Now, the second article, well, let's get into this first one here. Brazil offloads, $61 billion worth of US treasuries and buys gold. Now, this is becoming a very common and an all too familiar theme where
Mhm.
countries throughout the world who have been holding US debt and dollars as their literally their primary asset um, for forever, decades and decades and decades, now not only are not holding those assets, they're dumping it, but like in this case, they're buying gold. And I kind of wondered about this, Chris, and
Mhm.
it finally said it in here because we have heard so much about the records being set in terms of like central banks and how much gold that they've been buying. But the World Gold Council in this article talks about how BRICS remains the largest buyer of the precious metals since 2022.
Yeah.
And when I read that, I wasn't surprised. Now, to be fair or clear, there are BRICS nations who are also representative of the central banks out there. Now, I don't know what that correlation looks like. I don't even know if that information is out there to, differentiate what BRICS is doing from just the normal central bank buying.
Mhm.
But there's certainly some kind of a connectivity there. But with this being said, they say that the BRICS alliance, the World Gold Council says this, now controls over 50% of the global supply of gold. They call
Yeah.
it the glittery metal. That being said, they go on to say the US Treasuries and bond market are facing stiff competition from diversified assets. The investments in gold are paying off, while holding US dollar denominated assets is now a risky affair. And they're
Yeah.
right. And problem being, you see headlines like this, which this has been become an all too familiar headline. We see this stuff like this all the time over the last 2 years that we've been doing our podcast alone. And at some point, you know, it's not going to be just that the dollar is a risky affair. I mean, the dollar is going to be a losing proposition as it loses all of the global support that it's maintained for all these years. And so I think this just speaks to, when I read this, Chris,
Yeah.
and I've talked about how, like, if I'm watching CNBC or Fox Business, they don't talk about this whatsoever, not at all.
You're right.
And this is like a major, major issue and thing in the US economy and the global economy. And it's just not
Yeah.
being addressed. And that's why I would
Yeah.
encourage the people tuned into this podcast. If you're not taking a look at your investments, your assets, your portfolio, and factoring stuff like this in, you should. And contact our office if you want to find out more about why gold is something that they're doing right now. But Chris, this is concerning to me.
Yeah. Well, as I was reading this, I thought to myself, I mean, obviously this is on a much bigger scale, but this is just what our clients have been doing. They've been
Yeah.
offloading their US dollars and putting it into a physical asset, mostly, gold and or silver. And they've seen much better returns over the last several years than had they kept their money in cash. So, obviously, there's a lot more at play here when you're talking about a nation like Brazil, doing this. But it makes perfect sense. Why would they keep their reserves in the U.S. dollar if the U.S. dollar is losing value? And if the U.S. economy is maybe a bit more unstable than it was, I mean, there's a lot of concern about that in our banking system. And so it makes sense. Not to mention the sanctions and the other things that politically speaking, the U.S. has sort of used the dollar as a bit of a weapon or a tool to get what they want. So I think it makes perfect sense that, again, they're doing it on a bigger scale, but the same thing that our clients are doing, and look at their portfolios over the last several years, and how happy they are. So I don't think it's going to slow down, and especially if they're continuing to accumulate, and BRICS already has 50% of the world's holdings. And again, that's what we're able to identify here. We talked in our last podcast about how China was actually accumulating about 10 times more than what they were on record for holding. So who knows what the real number is? It would not surprise me if it was significantly larger. And where's that going to put us in the next 3 years or the next 5 years? If the BRICS alliance decides, we're completely done with the dollar. Right now, they're sort of still being somewhat pleasant in their interaction with the U.S. and saying, we're not really doing this to hurt the U.S. dollar. We're really doing this to strengthen our own positions. And there may be some truth to that, but I think once they have all the leverage, there's a chance the gloves could come off.
I totally agree. And, you bring up an excellent point. This is being reported by the World Gold Council. However, I've got to believe the World Gold Council knows what China wants them to know. Why would China show their hand? And
Right.
it's not like there's this. I've been in the gold business for 33 years, not on the level of dealing with central banks and institutions, just full disclosure. But I find it very hard to believe that there's some kind of paperwork process involved per se before they
Yeah.
start moving assets. I mean, think of all
Right.
the things that happen in terms of various forms of trades that are allowed to happen by, it's basically like using shell corporations or whatever
Mhm.
else. To your point, I mean, I would lean to what you said, where worst case scenario, this is what they have, and it's probably even much more than that. And so, again, it's just where people are running for cover right now. And the thing is, because what it seems like the U.S. is really not addressing this issue. They're doing President Trump is doing what he can, but by the same token, it's like this snowball was already rolling down the hill.
Right.
And right now it's just a matter of I believe, just based on numbers, a little bit more of damage control that he's in the midst of versus anything else.
Yeah.
And what it's allowing the world to do is to just very methodically buy up gold and get themselves diversified and get rid of treasuries and get rid of dollars. And
Mhm.
meanwhile, in fact, this is a good lead into our next article. Meanwhile, what's happening here in the US, this next article out of the Daily Huddle, the US adds 132, is that billion? Yes.
Billion. Yeah.
132 billion. I'm so used to saying trillion, I just had to double check. The US adds 132 billion to national debt in 1 month as
Yeah.
JP Morgan Chase CEO warns borrowing is unsustainable. So you got
Yeah.
these last few things that we've talked about. You've got these countries, you've got BRICS, who they're unloading US treasuries, unloading dollars, and buying gold. And yet we continue to my earlier point, rack up debt like nobody's business. I mean,
Yeah.
national debt exploded over, right here from the article, the Treasury Department shows it exploded to over 38.5 trillion on January 26. I mean, it's out of
Yeah.
control. It was just 30 a couple years ago, if I'm not mistaken, or give or take.
Yeah. Yeah.
So 132 billion a month, Chris, that's a lot.
Yeah, and he says, "Look, we can't sustain this. It's unsustainable." Now he is saying this isn't necessarily a problem that we're going to have to ultimately face in 2026. Um, but you and I both know how quick a year can go by. So this is right around the corner. Maybe it's 27, maybe it's 28. I mean, I do think that, like you said, I think President Trump is doing what he can. But to some extent, I think ultimately we're just lucky to still be staying afloat. And when you're continuing to pile on this debt, and yes, he's trying to right the ship, but this is our economy is a big beast. You can't just turn it on a dime. And with these numbers continuing to rack up, and the fight that we have in Washington, I mean, we can't get the two parties in our country to agree on almost anything.
Right.
And when when you don't have a strong team working towards a common goal, you're going to have a hard time getting any progress, because even any of the progress that we do make can easily be undone by the next administration if it's not one of their priorities.
Right.
And so we've got a mess here, and nobody really wants to address it. I think it's a lot of smoke and mirrors trying to make the citizens of our country feel like we've got some good, smart people in control. And I think right now, behind the scenes, there's a lot of chaos and potential disaster if we can't pull things together here.
Oh, absolutely. Well, and think of it in these terms, Chris. If take China, okay?
Hmm.
If they have the ability to sit in, or who's yeah, China, I think we're talking about earlier, sit in $60 billion worth of US debt, treasuries, or $60 billion in gold, what would you choose?
Right?
Especially
Yeah.
you read this headline that we just covered here, where you've got, the US adding in 1 month 132 billion to the debt, which,
Yeah.
ladies and gentlemen, if you do the math on that, that's over $1 trillion a year. It was a year ago, it was a big deal that the debt was going to grow, the interest on the debt was going to grow by was it a trillion dollars in a year? Is that what it was, or was it going to grow? And again, the trillions, they just get thrown around so casually. These numbers are just
Yeah.
out of control. I mean, we're getting obviously far closer to 40 trillion now than not, and it
Yeah.
wasn't too terribly long ago we were just at 30. So why
Right.
wouldn't they get rid of those treasuries and buy gold? And here's another thing, ladies and gentlemen, and another reason why you should all be buying gold and you should all be buying silver right now. They've been doing this for 2 years by the tonnage. So gold, when they started doing it, was 2,000 an ounce.
Yeah.
Right now, it's peaked over 5,000 an ounce. So not only did they get out of an asset that seems to be uh, on the road down quickly, but they
Yep.
got into an asset where it was probably one of the best investment moves that they've ever made, just in
Mhm.
terms of, like, they've better than doubled their money.
Yeah. Absolutely right.
And especially going back to I think it was a podcast we did earlier, not this one, but an earlier one, where there are some forecasts that are talking about the price of gold being, what was it, Chris, like 12 or $16,000 by the end of this year.
Yeah, and 20,000 by 2030, which is only 4.5, 5 years away.
Yeah. So, I mean, it just speaks to the condition of the world. And like I say, it really blows my mind that this is not getting more national attention in terms of, what is going on with our government, because you have other countries who seemingly are making some pretty good, sound financial moves right now in preparation of the future. It doesn't look like in the US that we're in a position where we're able to do the same thing, unfortunately. So,
Yeah.
all right. Well, for those of you tuned in, thanks for being here. And we look forward to talking to you more in the future. If you'd like more information on this, you'll see our phone number where you can call or text in the show description here, the title description of the show, or visit us online. And if you're not subscribed to our podcast, please do so, because we'd love to talk to you more in the future. Have a great rest of your day. See you soon.
Take care.